timely, insightful, discussion and analysis of economic trends and markets. From Southern California to Sacramento, featuring business and political leaders, unique field reports. From Orange County and the campus of Chapman University, this is the Chapman Business Report.
And welcome back to the Chapman Business Report. It's our weekly look at business, the financial markets, and a special focus on the regional economies of Southern California. I'm Pete Weitzner. I head up the broadcast journalism program here on the campus of Chapman University, actually a couple blocks west at the Dodge College of Film and Media Arts. And to my left, every 6 months or so, we check in with the guru, the real estate guru, Phil Immel. For better than 3 decades, been selling real estate in Southern California, California Prudential Realty, and we get his take on how the market's doing and all sorts of trends in real estate. At the end, we'll duck in our great student feature stories. Taylor Neville's got a look at one business where companies have decided it's better for them to all band together than beat each other up. And also one place where they are still buying hardcover books. Daniela Pardo and Asia Celestino will have that story for you out of Long Beach. But let's start locally, and let's start with real estate with the guru. And Phil, what do you see? We look at the numbers that come out now the early part of 2012, and so it goes. Kind of the pace seems it's not what we're used to in a rip-roaring market, and prices are still flat to maybe even lower. But you're on the front line. What do you see?
Well, I've seen the beginning of this year take off better than it's taken off in the last 5 years for the first quarter. By that I mean we've had a lot of great sales. Anything below $1 million in this market, I think, will start stabilizing in 2012. And they're flushing. The REO bank-owned inventory is flying off the shelves, and we represent some major banks. And
of the homes on the market, still the same percentage that are REO and foreclosures?
Yeah, about 50% of it's been distressed properties for the last 2 or 3 years now.
Which is why overall prices are down.
Exactly. There's deals to be had, and now investors have stepped in. So besides the first-time buyer, typically, the investors have stepped in paying all cash for a lot of the market, probably 40%, maybe 50% in some cities around Orange County. So we're seeing a big uptick in the bank-owned purchase. The higher-end properties are still, soft.
Right, and that's to be expected. I mean, you need, of course, the financial markets have come back, but you just need a much stronger economy for those 7-figure homes to move.
Yes.
And even their financing is extremely difficult.
Right. I mean, it's the reason the low-end market's working well is investors can make sense out of making rentals out of these properties, number one. Number two, you've got FHA, Fannie, and Freddie Mac financing up to 729 loan balances, where that kind of went south 100,000 last year. They brought it back up to these levels, and that helps a buyer 3% down FHA get into a home they otherwise couldn't.
Right.
So that's what's helped, and then they've got the investors buying rentals and starting to cash flow with 20-30% down, which we haven't seen in decades in California.
Data quick numbers certainly bear out what you were saying. Looking at January, Southern California wide, 14,500 homes, a pretty good total for January. So homes were moving, but the median price pushing toward the recession low of all of Southern California at $260,000. So still, I know last year, the Case-Shiller folks said nationally home prices fell 5%.
Right.
What do you think, they level out this year?
I think there's still, the actual transaction count is still softening. And again, there's always seasonality to real estate. So this year started off pretty early.
But the buying season has started, right?
The buying
this time is
after Super Bowl Sunday, which I know you like Super Bowl, because I know you went and I didn't. But after Super Bowl Sunday, the market
Giants
really.
win? I think they did.
Who are the Giants? In any event, what happened is it started out very strong in January, and mostly the investors coming in and first-time buyers. Because remember, interest rates are historic lows, like 50, 60-year lows. So people are getting nervous, and there's only so much inventory that can come out, and they can get a great deal at typically half price of what it was 5 years ago. So the smart money's moving, both buyers that are going to owner-occupied as well as investors. The higher-end market is really difficult because of lack of liquidity, and there's no Wall Street plug-in for the jumbo mortgages.
Right. Within Orange County, within Southern California, better pockets, weaker pockets?
The coast has really seen a pretty strong absorption of all of the distressed property, which is both short sales as well as bank-owned REO properties. So that's starting to stabilize first, which is pretty natural in the California marketplace. The further inland you go, if you got to Riverside, it's taking longer. But people, if they can get a deal, and that's why prices, it's kind of a dichotomy, because you got prices going down and transactions starting to increase a little bit. But that's why it looks like a stabilization's ahead for the remainder of the year. for the under 700,000 price range.
With the lower prices and with mortgage rates, you mentioned, I think it's 315 as we record this early March on a 15-year. It's about 380, all-time low.
Right.
60-year low. Affordability is probably at the best it's been in Southern California in 50 years.
True, it has. It's been, well over 40, 50 years where the combination of affordability rates, what people actually make and converts into their payment, is the best it can be. And then you get the tax write-offs. So there's a lot of advantages if you're a first-time buyer to be in this marketplace.
That's if you can qualify.
If you can qualify. If you're a W-2 employee, you're in great shape. If you're an entrepreneur or self-employed individual, it's extremely tough. You must have the tax returns to back up your earnings and for 2 years or more. And good FICO scores.
FHA aside, which is still 3%,
Yes.
or VA loans, do they still want, even from a first-time buyer with a W-2, are they still 20%?
No, if you do VA, you can do next to nothing down.
Right.
And then FHA is as little as 3% down.
Those aside.
Those aside, your Fannie and Freddie, no, you can get by with 10% down. You'll end up with private mortgage insurance, perhaps, and other things, and they'll price a premium on all of those. The more down you put, financially, the better loan is. But if you don't have it, it still may make sense to pay a little premium and get the tax deductions of home ownership.
For the benefit of those who don't know, the FHA loans, which I think have become more prevalent, how do they work? What are the terms?
They're a fixed rate 30-year loan. They're probably one of the safest loans you can get in America, and historically have always been that kind of situation. You could buy a primary home, or you could buy they're 1 to 4 units. You can buy duplex, triplex, 4 units. You must own or occupy the property. Same with VA and Fannie Freddie as well. They have investor programs as well, but for the purpose of this show, I would say they're probably the best loan. I would tell any of my clients that are first-time buyers, absolutely FHA, and if you can put 3 to 5% down payment and leverage, you're in great shape.
Sure, and it used to be a moot point here in Southern California or Orange County. I go back to the days when the max limit was a little over 400,000. Now it's
720,
which not only does this get you an entry-level home,
right.
I mean, it gets you a 2,500 square foot home in most parts of Orange County.
Right. 5 years ago, the reach would have been the opposite, but because values have fallen on average 50%, you can really get a lot of bang for the buck. And you should see the REO bank-owned properties that are selling in the marketplace. These places are beautiful in towns like, Talega, Ladera Ranch, all over Irvine. And the value today is better than, we're going to look back in 10 years and go, I wish I would have bought X, Y, and Z. Even our boss, Warren Buffett, who owns Prudential, he said, it's time to go out and buy a couple hundred homes for himself.
Go pick up a couple hundred homes.
Yeah, he hasn't called me yet,
Is the hardest thing to surmount, the hardest thing to convince a buyer, lack of confidence in the economy or lack of confidence that their homes will go up in value or not lose value?
Well, I think the losing value concerns the upper end luxury market. If you put 10 or 20% down and it drops another 10 or 20%, you're kind of concerned. Right. I think we go back to the adage of what America was built on: is you buy a home to live in it. You don't buy it as a piggy bank, make an ATM out of it. Everything that happened in the last decade wrong is not what should happen in the future. So you buy it for your family, your home, to live and raise a family, and you hold it for 5 to 10 years, and everybody should be very safe.
We've talked about this a little in the past. You do sell, I think, on occasion. You've sold new homes. You're mostly in the resale business.
Right.
So now I see finally there's some building going on. Permitting is up. I see a lot of building here in Orange County and Irvine. Does that pose competition for what you do, or is it, if there's building, that means people are getting more optimistic, feeling more about buying real estate?
Well, I think it's a good thing for consumers to track that if the builders like the Irvine Company and Donald Bren and his group, with a lot of smarts in these organizations, are starting to make the moves to pull permits to build homes, you should pay attention to that as a consumer, because they have got 24-hour research going on before they start doing this. So if there's new homes, which really is a small slice of the market, it could be 2-3% of the average number of Orange County sales, maybe as high as 7% in any given year. So it really isn't that meaningful, but the trend of what they're doing is what's meaningful for the consumer to watch.
Right, and they say the number 50 on this home builder index is a healthy or optimistic market. It's been in the teens forever, and now it's trending toward 44. So they see something. They certainly see an improving jobs picture, I suppose.
Right.
And they see the combination, as we've been talking, of lower prices and low mortgage rates. Your take, we've been talking for years as Congress, the White House have put out various measures to kind of goose the real estate market. Of course, there was the first-time buyer credits, and that did goose the market. Right. And there have been mortgage mods, which I think were largely unsuccessful. And then you had this robo-signing scandal. And now led by Bank of America, some homeowners are going to get a principal write-down. Your take on this?
That's the big moral question. You know, if your home loan gets clipped off $100,000, and I've made my payments over here and I haven't.
Why not you?
Yeah. Do you open a can of worms that's beyond what anybody imagined,
The moral hazard.
Is this the situation that can break the block of the dam right now, where everything's been built up? Might that stabilize the real estate market? And to me, it's the last real meaningful thing left. And I think done right and on a reasonable pace, that it should happen, because the cost to the bank is going to be more to miss payments for 1 or 2 years and foreclose and evict people out of the property. So financially, the bank may end up situation by home better off by doing this. And I think it's our last hope. Otherwise, this economy is going to drag for years to come yet on real estate. Whereas if they start doing that and people can make their payments on a lower amount and it makes financial sense to them, I think we'll be out of the woods maybe a year or two earlier than otherwise. The market forces would naturally take effect.
Right, and it's not as if they reduce the principal to what the home is worth and then you can flip it. You have to stay in the home.
Right, stay in. And of course the interest rate has to be, attractive. If you can refi your existing mortgage and not worry about the appraisal because you're upside down, which there's numerous of those homes in Orange County and Southern California.
18% in Orange County underwater. And these are not folks who the home is worth less than what they paid for it. These are folks the home is worth less than their mortgage.
Right, because so many people got in and then their refi took money out.
Right.
And for that situation to continue, I think it should be a beneficial thing. It's got to be done carefully, and it's not just B of A. The major 5 banks are part of this whole situation, and is part of their settlement of what, 25 billion?
25 billion.
25 billion, and so we'll see. But I think it's worthy of a try, because all the other things didn't work, and we wasted a lot of time, energy, and taxpayer dollars.
Most analysts think it's 5 years, 2016, 2017,
right,
when we get back to where we were at home values and a very healthy market. If we sell here in Orange County in a weak market, 2,000, 2,200 in a month, 4,000 would be a very healthy market.
Right.
If we were at 365, I think on the bottom, I know we were at 645, which we probably, but maybe 500,000 would be the median price. Is that what you see about 4 years and those kind of numbers?
Yeah, I'm a little more conservative. I would say it always takes longer for something to come to fruition than you think. My range, I tell clients, is, look, if you're in the home 5 to 10 years, you're going to be safe. Again, you're not buying it because you want the median price of your home to be worth X.
Sure.
You're buying it for the value of owning a home.
Well, if you add up those tax benefits, especially if we go to a 15% marginal rate in California.
Wouldn't that be nice, right? What day does that happen?
CPAs, no, it's going to be on the ballot to raise the top marginal rate to for people who make over $2 million. But it would increase the tax benefit. But if you add up the tax benefit for someone who owns the home for 10 years.
Right. Oh, significant. I mean, if you're in a 25% tax bracket between state and federal, and you're getting subsidized for your mortgage interest and your property tax deductions, that's a significant value to have that available. And so it clearly makes sense to do that. So again, buy it for ownership reasons, not for financial. However, I'd say look 5 years and beyond, because it still's got some bumpy roads ahead here. It'll get better and better gradually, just like the rest of the economy will, which it is, and we're seeing signs of it. Relative
to the rest of the country, I was just giving the figures for underwater homeowners, and in Southern California, it's 30%, it's 18%, Orange County, some places still 50%. What do you see going on across the country? Are there some good pockets? Arizona, I think, and Florida have been the worst, and Nevada.
Right.
What do you see?
Well, the top 3 states for bank-owned foreclosures, obviously, Nevada, Arizona, California. And the highest number of them, just because of concentration of homes, is California. But what we're seeing is we're seeing investors. In fact, my CPA has formed a little team to go out and buy a bunch of $70,000 condos that used to be maybe $200,000 homes and/or condos in Las Vegas, because they can go there, rent them out, and have positive cash flow. That's very nice. Get a 10 to 20% return on their money. I don't know where you're going to get that in the stock market these days, you know. And so, but they're planning on holding them for 5 or 10 years and then maybe sell them later. So I would say, for investors looking out of state at the bank-owned, things could be good. And Florida's coming along better.
And for investors looking here, the rental market is very strong. Rents are moving higher.
Absolutely. Rents are going up We have some rental properties I've owned for a number of years, and rents are continuing to increase, and they're probably going up 5 to 6% a year. And you do that for a 10-year hold on something.
We have a shortage of multifamily, or because the economy's improving?
Well, I mean, these could be single-family homes. It could be what's happened is so many people have been displaced from doing short sales, and they got marginal credit now, and there's not a lot of thing, but they'll pay you a year cash up front to move in, or they'll do whatever. And the lenders are paying them cash for keys to move out. So they get a moving truck. They might have extra security deposit with damaged credit to move into one of these rentals, that they got to live somewhere, and they still have jobs, so they need time to repair. So all that's going on right now, and that's why the absorption rates have been very good for rentals, and that's why it's a great time to buy them. You know, I don't know if it's 5-6% vacancy factor now.
Right. And I don't see that much multifamily building going on. You would think there would be.
You would think so. You know, I'd call Donald Bren on that part of the interview. He would know.
Nothing sacred in business these days. Grubb & Ellis has been a time-honored name. The black and orange signs for more than 50 years. Started in Northern California, most recently headquartered in Santa Ana, and they're going out of business. They're being sold for a song.
Yes.
You say you knew a couple of the past CEOs. What happened here? That obviously commercial real estate, like residential, is. But what happened to one of the Tiffany names in commercial real estate? Not your, I know you're residential, but
right. No, it's a great thing, and actually, Prudential California Realty in Orange County came out of the situation where we've got Grubb & Ellis used to be residential and commercial, just like Coldwell Banker did. So what happened is they sold out in the late 90s, they sold the residential brand to Prudential, which, you know, that I'm currently with, and then they went all commercial. But what happened is, just like there's major real estate companies that have failed residentially or commercially, that just happens to be, like I said, the Tiffany brand. It's a great company, great group of people work there. There's a lot of dislocation going on in the industry, and it's an unfortunate thing. Any one group, why do General Motors have its difficulties?
Sure.
They should come back. It's all depending on the talent of the people.
Right. Well, it seems like as big as they are, there are still the Trammell Crows and the Marcus and Militaps that are just bigger, and those are the ones that survived, right?
And recruiting heavily.
Right. You know, Les, I always like you to give some nice consumer tips on both sides. So let's start with a buyer, which we've been mostly talking about.
Right.
If you're a first-time buyer, a couple of mistakes they usually make, a couple of things they should do to get it right.
I think the first thing to do is really get connected with a good realtor in the market areas you're interested in. Then get on an email watch through the multiple listing system through that realtor. You can do your own online research, but the fastest way to keep up on the market, look at trends, graphics, and do your own research. Find out, you know, what the trend lines are. Is it a safe time in a given? You could microcosm it down to zip codes and even deeper as a consumer. So do your research. Interview 2 or 3 realtors that are pros in your marketplace that you're thinking about. Use their knowledge combined with their skills, and then get pre-qualified. You know, if you run out in the marketplace, if you buy a bank-owned foreclosure, you must have a pre-approval, meaning subject to only appraisal done. That means all your stuff, your homework is done that you inevitably do anyway. So you must do that.
On the sell side, what's 1 or 2 things to have your home move faster than your neighbors?
Always number 1 is price, regardless if it's a pig in a poke or it's a beautiful mansion. 2 is declutter it, show it well, especially spring and summer. You know, get your landscaping brought up to speed, make the house pretty. You know, residential is an emotional buy. 80% of it's logical. You can do math all day and say that's what that house is worth. Then comes the emotion and what the spouse tells you we're going to do. I'll leave it at that.
Okay, we have, when we do this show again in 6 months, what kind of market do you think we're looking at? We'll be right on the eve of an election. If that has anything to do with it. I think they've done, in fact, there's nothing that's going to come in 2012 to spur the market. We know that.
No, but I think we're in a gradual progression upward in the market, and I think we're going to have better numbers to talk about because we're going to have the best 6 months of seasonality ahead of us.
Sure.
So it should be a good report when I come back.
And it seems like everyone's done buying their new car, so
right,
now it's time to step up.
Now they need a garage to put it in.
Phil Immel is the real estate guru, also long-time veteran, 3 decades, California Prudential Realty. Always a pleasure, my friend.
Thank you, Pete.
Stay tuned, time for our great student feature stories, including a look at how one business decides they can all do well if they band together. That's coming up for our student feature stories on the Chapman Business Report. Welcome back to the Chapman Business Report. This is a great time. Our student feature stories will start with Asia Celestino and Daniela Pardo. One place they visited where people are still buying books and paying big money for them. Take a look.
Some say books are old-fashioned, and vendors at this book fair agree. The California International Antiquarian Book Fair is the largest in the world. And what does antiquarian mean?
It means antique, so we're talking about antique books.
This rare event comes to California once a year, bringing together diverse customers and booksellers from all over the world.
It's really nice to come to because there's lots of book dealers, so if you're a collector, there's a wide variety of things to collect.
The variety is endless, with prices ranging from your typical Barnes & Noble buy to something costing more than your house. One book even sold for $1 million.
The book is called Viditorum Novidiorum. It was first published in Lübeck, Germany in 1475.
The chairman of the fair says that despite the cost, a book's value goes past its price tag.
When that lands in your hand and you realize, start thinking about how many people over the centuries have had that book in their hands, who's read it, the importance of this book, and you're holding it in your hand, that's magic.
And customers agree.
Because there's something about holding a physical book and turning the pages and seeing this, I feel like books will live on forever.
So if you want to seem instantly smarter, the Antiquarian Book Fair suggests you put that ebook down and join them in San Francisco next year. From the Pasadena Convention Center, I'm Danielle Pardo, Chapman News.
That's Antiquarian. And we finish up with a look at an area where companies have decided, small companies, that if they get together, there's more strength in numbers versus beating themselves up. And you know these kinds of businesses. They've become very popular in the last 5 years. Food trucks. Taylor Neville has a look.
OC foodies are celebrating their lunch break with the latest culinary cuisine here at the Food Truck Fair in Costa Mesa. And I'm in the spirit as well with this old-fashioned grilled cheese. Oh yeah, that's the stuff.
Today's Meals on Wheels aren't your typical Roach Coach. In fact, they run the gamut in top-notch good eats.
It's just quick, fast, cheaper than going to sit down in a restaurant, and it's fun just to see other people come out here and, I don't know, interact with each other.
Food trucks today are not only sought out for their affordability, but also for their signature flavors.
We are Bacon Mania, so it's all American food enhanced with America's favorite flavor enhancer, and that's bacon. So all pork belly.
How did this all begin for you? Were you a restaurant before, or how did this start?
Well, I was a tailgater, and I traveled the country. I've been to every NFL stadium, and there's one thing that we really noticed that was across all the food regions in the whole country, and that was bacon as a staple in every single regional food. So we decided what better way to share our experience in our food and our love of food than with bacon.
Unlike most competitive restaurants in Orange County, food trucks embrace their competition in a different way.
We kind of realize here in Orange County that the best way to attract a lot of people to eat off our trucks and to deliver good food is to all kind of group together. So whether that's 6 trucks, 8 trucks, 12 trucks, we try and kind of group together as much as possible.
If you missed last week's food fair, don't worry. The trucks set up shop every Thursday from 11 to 2 in the fairgrounds parking lot. From Costa Mesa, I'm Taylor Neville for Chapman News.
Now that we're all hungry, I thank you very much for watching the Chapman Business Report. And as always, to Jeff Cole, class of 2001 here at Chapman, Jeff Cole Productions. His team does the entire show, including our special guest, Joshua Cumming. I want to thank him for helping us out, and all of our great Chapman TV students. Thank you very much for watching. Back again next week with another look at business, the financial markets, and a special focus on the regional economies of Southern California. And of course, a big thanks to the real estate guru, Phil Immel, his insights on residential real estate. We'll see you next time. I'm Pete Weitzner.
Funding for this program was provided by Chapman University.